there's a section of the bill called no tax on tips. It's not really that, it's actually a deduction that offsets tips income. As far as we understand, it's a below the line deduction. I've seen a few articles that call it above the line, but as far as we can tell, it's below the line. It lasts from 2025 to 2028. It's a maximum of $25,000 regardless of your filing status. So minor little marriage penalty in there. Speaking of married filing separate is excluded from this deduction. So it's all the other filing statuses. Data entry wise, let me just show you how we do it within the wages spreadsheet. So we have a wages little sheet here. We pop that open, and that's where I entered tip income for this taxpayer. So that's one place to do it. Now, another place where you could have tips is actually through Schedule C. And right now we didn't have a box for Schedule C tips income. We had to add that. And the thing with Schedule C income just to watch for is you don't get to take the deduction on tips unless your Schedule C actually has a profit. Like you have to turn a profit on the business in order to get the tips deduction. But let me show you where that is within Schedule C in our system now. Here it is under Schedule C. I'll open this up here and you'll see there is a new field called Schedule C tips. So that's where that will go. Now there is some math that we had to add in, and we think we got it right, but we'll just have to see for sure, where you're trying to avoid a double counting situation with QBI and with the tips deduction, right? Because if we bring tips into Schedule C income, that's part of QBI. And so would you get a QBI deduction on that and also a deduction on the tips through the tips deduction? And so we had to do some math to back that out on the QBI side. We're just going to have to see if we nailed that, but I think we probably got it right, or at least got the idea of it right. Now there is a phase out on this. So let me just first of all show you where this tip deduction shows up within scenario analysis. Again, our read of this is that it's a below the line deduction. So you can see here I've got my itemized / standard deductions right here. And so we have this other section called other deductions in QBI here. These like below the line deductions, right? Like below the line deduction. And here's tips right here, $25,000. Now the phase out. So for joint filers, the phase out is $300,000 through $550,000. For single filers, it is $150,000 through $400,000. So it's actually a pretty wide phase out. It phases out over $250,000 of MAGI, modified adjusted gross income. In this case, MAGI is defined as your AGI, where you add back your foreign earned income exclusion, foreign housing exclusion / deduction. Let me show you in range calc what this looks like. Again, relatively wide phase out range. And so I'm running range calc here. What range calc is basically you take your scenario and then you start adding $1,000 of income over and over again, and then you rerun the entire tax calculation over and over again. And then we're calculating what is the impact of that next $1,000 on tax. And in this case, this person is in the 24% bracket, but that no tax on tips deduction is phasing out. So we tack on an extra 2.4%. It phases out at 10%. So 10 cents on the dollar. And so that's why it's 10% of 24, 2.4% over here, 3.2%. But you can see it's a pretty wide, again, a wide phase out. I've set this up so that it starts phasing out like at the next dollar, but it doesn't fully phase out until I hit $250,000 more of AGI. That's what's happening with this chart here. So that's the story. That is the deduction. That's also known as the no tax on tips section of the tax bill. It's almost identical to how the overtime deduction works, except there are these slightly different rules around self-employed people and the eligibility there. We're gonna have to see down the road how exactly the IRS interprets these two sections. The overtime deduction section just has a paragraph that says the IRS has discretion to make sure people don't cheat on this thing, basically, or don't abuse it. The tips deduction section is like pages long, trying to define what an allowable tip is or not, which professions is it allowed for. And I think that makes sense in our culture, in our country. There are a number of professions, including self-employed professions, where people do receive tips. I mean, one of the things that's actually a profession named in the bill itself is like a hairstylist, for example. That is a profession that traditionally could be self-employed, often is self-employed, but also receives tips. So I know they're trying to figure out how do you make sure you avoid abuse for someone who's self-employed, but also recognize the fact that there are professions where people are self-employed who receive tips. So action plan for advisors is, I think you just got to watch what the rules are. And if you have a client who's in one of these fields that does receive tip income, they're going to have to be much more laser focused on what are the rules around, is this allowed or not in the bill? Does the bill consider this to be allowable or not? And then also, how do we make sure we report it properly on Schedule C, and then make sure we understand the interplay between the tips deduction and the QBI deduction.